Hey guys, this is Mr. Roxy. I am in West Palm today, and some of the members of our investment community have asked me some really interesting questions, including some that I didn't actually know the answer to. So I thought I would do what any logical, rational person would do and pose some of the questions that I didn't know the answers to um, and direct them at Occidental Investor Resources. And that way, investor relations, and that way I can get you some good answers to the questions that you asked. And thank you very much for the questions that you asked, because it's really cool stuff, and it kind of gets us into the mind frame of learning more and more about the company, in this particular instance, Occidental, that we are invested in. So this is going to be a little bit of Oxy Q&A with yours truly, Mr. Oxy. And I thought I'll just call it coffee time. So here's my coffee. It's actually a small espresso. It's bigger than my head because it's close to the camera. But it's coffee time with Mr. Oxy on June the 15th, 2021. It is Tuesday. So let me get my energy boost, and we'll get the show on the road and talk a little bit about some of the topics that came up for discussion in the past week or so. Great discussion with Wimo, Samara. Thanks for all the interactions, Wimo. It's always great to chat with a member of our community, and this way we can learn from one another. Wimo posed the not so much a question, more a comment. He said the ESG. This relates to the video that I made before about environmental, social, and governance. The ESG investor crowd will not own shares of a fossil fuel producer, even if they have a CCS project on the side. Wimol says so, and he sent me a link to a YouTube here, which is something, if you're interested in, you can find his comment on our community channel's comment section, and then you can take a look at the YouTube that he sent. Really interesting stuff. And Wimo, as I said, thanks for the comments. But let's take a look at this just a little bit more in some depth. So, of course, right now the G7 leaders, sorry, let me just put my espresso down for a second, leaders have been gathering in Cornwall in England, all hugging each other, telling each other jokes, smiling and laughing, having barbecues, dancing, etc., whatever they do, because they certainly don't do any work. While they tell you to stay at home and wear a mask if you live in countries that are severely restricted, like Canada and the UK, for instance. In Florida, in the United States, we're relatively free. And every time I speak to someone from one of the northern states, like New York or something like that, they say, like, we live in a bubble here because we just cannot believe how free you are to go about whatever it is that you do. And for those of you who've been following my channel, obviously you'll know just the last weekend I was in Fort Myers. I mean, I literally go away almost every single weekend. But anyway, let's get back to the news here. G7 nations have been pumping more into fossil fuels than in clean energy since the start of the pandemic, despite their headline-grabbing pledges of building back greener and blah, blah, blah. Since the pandemic started, this is my word, not theirs, major industrialized nations, including the United States, plan to pledge to achieve net zero emissions by 2050 and strengthen policies to support renewable energy, electric vehicles, and energy storage. Well, that's the goal. What are the facts? The group of seven, Canada, France, Germany, Italy, Japan, the United Kingdom, and the United States, from January 2020 last year to March 2021, have committed $189 billion to support coal, oil, and gas, while other clean forms of energy received only $147 billion. This is one of those why don't you put your money where your mouth is kind of situations, because they talk a lot, but of course we know they do very little. How about this one? In January, we is oilprice.com. So at the bottom here, you can see I'm quoting Alex Kamani from oilprice.com, warned that the green energy sector was in danger of overheating after massive run-ups by clean energy stocks in 2020. Of course, Uncle Joe Biden ascended into the Oval Office, and that made everybody say, like, okay, that's it. Now we're going to get an ambitious clean energy plan that'll be a tailwind for the so-called ESG investors. It's not me who said so-called, it is Alex Kimani. Solar stocks began to let off some steam in January, this is of 2021, with leading solar names such as First Solar, Solar Edge, etc. selling off in double digits. Man, these guys have crashed and they are still kind of crashing. Right at the bottom there, clean energy has so far been the worst performing sector. Investors are just yanking cash from the sector at the fastest pace in 1 year. Back to Wimal's question. So I just randomly, literally, with the exclusion of Oxy, because I'm Mr. Oxy, right? I just randomly pulled up some energy companies. So I said, how about First Energy and ExxonMobil? This exceedingly good-looking dude down at the bottom left on the screen is Larry Fink. He is the CEO of BlackRock. Now, Mr. Fink, in his letters to shareholders and on his TV appearances, Larry Fink will do anything to be on TV. So whenever he gets a chance to be on TV, he is always telling everyone that they will no longer, they being BlackRock, will no longer invest in fossil fuel companies. They are following an agenda of ESG, remember, environmental, social, and governance minded investment philosophies. In addition to that, they support the United Nations SDGs, which are Sustainable Development Goals. Talking heads on TV. But what do they do in practice? Much like your friends from the G7, BlackRock owns almost 8% of First Energy, 4.5% of Occidental, almost 5% of ExxonMobil. Give me a break. These guys just talk and talk and talk. While I have my espresso, it's nearly gone, but they do very little. Anyway, that's how good-looking Mr. Larry Fink. Question time. So a few of you, as I said at the beginning, had posed some questions. So let's get into them. Dr. Yeti Zhang sent me a question and he said, Rudy, according to the news, this one was via email, Shell plans to sell a $10 billion oil field in the Permian Basin, and some of that is a joint venture with Oxy. Could you please do a video about which part of the oil field in the Permian Basin Oxy has a joint venture with Royal Dutch Shell? Well, what I did was, Dr. Yeti, I sent a note to Occidental Investor Relations and I said, can you help me with this one, guys? And they said, you know, Anadarko and Shell had a joint venture to establish operatorship on acreage in the Texas, Delaware. Today, the operatorship is approximately a 70-30 split between Occidental and Shell. 70-30, Oxy, Shell, not the other way around. We have seen press reports that Shell may be interested in divesting their acreage, but do not have any additional information about their intentions. Now, of course, even if they had additional information about Shell's intentions, they probably wouldn't share them with me. Despite the fact that I am Mr. Oxy and actually almost acting as the marketing department for Occidental Petroleum. How about this question from Alexei in Moscow in Russia? Alexei says, Rudy, can you please tell us something about 45Q, the IRS tax discount, the IRS, Internal Revenue Services tax discount for corporations with CCUS, carbon capture, use, and storage? Daniel Ergen writes a few words about 45Q in his book, The New Map, in chapter 44. I recommend this book and this author to you and your subscribers. So Alexei, thanks for that. You know, I like reading. Initially, when Amazon came out with their Kindle, I downloaded a lot of electronic books, but you know, I'm back down to using paper, man. I just love the feeling, the cracked pages of a new book when you open it for the first time. Really cool. Thanks for that recommendation. So about 45Q, I did the same thing, right? I asked Occidental Investor Relations. Their reply was, the project's Low Carbon Ventures is working on do include plans to claim the 45Q tax credit. The 45Q tax credit belongs to the owner of the capture equipment or their designee. Designee, the person who might be operating it on their behalf. Think of the credit as helping to pay for the capture equipment. Man-made CO2 that is captured and permanently stored in accordance with IRS regulations qualifies for a $35 per ton credit when stored in conjunction with enhanced oil recovery, or EOR, and a $50 per ton credit, a tax credit, when the storage is not in conjunction with EOR. So I hope this helps a little bit, Alexei. This is not something I'm familiar with, and one of the reasons why I simply posed the question to Occidental Petroleum and investor relations can therefore give us a qualified, intelligent answer as opposed to having Mr. Oxy just sitting on TV like Larry Fink going blah 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 blah. The tax credit lasts for 12 years of the project's life. So that's the answer, Alexi, to your question. The next question came from Richard Cranium. Richard said, "Hey, Mr. Oxy, I'm not sure if you've done a video on this yet." The answer is no, I had not. But could you make a video to overview the 50-50 joint venture between the startup, All American Lithium, and a subsidiary of Occidental Petroleum Corp. regarding Salton Sea lithium race, Terra Lithium? Well, Richard, I will be absolutely honest with you and say, until you had posed this question to me 3 days ago, I had absolutely no idea, and I had never heard of Terra Lithium before. Occidental Investor Relations informed us being me and you as a result of you watching this video, that Terra Lithium is focused on producing lithium in a more responsible manner than the traditional methods that use a large quantity of water. I know absolutely nothing about lithium, except for the fact that lithium is one of the components of rechargeable batteries. Terra Lithium's process involves upcycling geothermal and other brines, extracting the lithium from this byproduct of geothermal energy production. This provides a way to utilize a brine that would otherwise be a waste byproduct. It's kind of cool, right? It's almost like the same way they can capture CO2 and then use the CO2 to increase their yield. In this particular instance, they're saying it provides a way to utilize the brine that otherwise would have been discarded because it'd be a waste byproduct. The press release Terra Lithium issued in early April mentions the Salton Sea, and I put the we in brackets there, can see how the area could be a good fit given the presence of geothermal power plants. So that's the take on Terra Lithium, which up until today I knew absolutely nothing about. So Richard, thank you for posing that question. There was a hyperlink in the investor relations response to me, which you can look up if you're interested. Terra Lithium receives affirmation of patents for foundational lithium production processes and technologies. And right here in the fourth paragraph, it says a partnership between All American Lithium and Oxy Low Carbon Ventures. Terra Lithium is striving to supply ultra high purity lithium hydroxide to the growing lithium ion battery market. So just by way of a little bit of background, 20 years ago or so, almost all the rechargeable batteries were nickel cadmium. And one of the problems with the NiCad or nickel cadmium batteries was that it built up a memory. So the more you charged it, the shorter its actual life became. So if you think of it from a user point of view, you might have purchased a nickel cadmium rechargeable battery for your camcorder, if you're old enough to remember having a camcorder. So what would happen in practice was you'd buy something and they would say, this is a 2-hour battery. And then the first time you used it, it lasted about 2 hours. But after a few months, if you used it often, or if after a few years, depending on how much you used it, the nickel cadmium will slowly start building up a memory. And then eventually your 2-hour battery will only last you maybe 20, 30 minutes. So the concept of using lithium ion batteries for rechargeable batteries as opposed to nickel cadmium was a giant step forward in terms of creating a better rechargeable battery. And that really is one of the core components of batteries for vehicles as well, like Tesla's batteries and so on. So just a quick snapshot of Occidental Petroleum. This is at the end of the day today, $29.20, up 3 and a bit % today. So a nice little finish here. I wouldn't call it a rally, but you know what? Anything over 29 is okay. It's sort of edging up to 30. It'd be nice if it gains a little bit of momentum over the next couple of days. And certainly it would be great to see Oxy topping $30 per share again, which I think is going to happen pretty soon. It's like everything in sort of conceptual or even philosophical terms is too good. Like everything is lined up perfectly. You've got summer coming. You've got consumption going up. There's no very significant disruption on the supply-demand curve. Everything's okay from that point of view, except for the increased demand. Also, as people realize that the pandemic is pretty much, has run its course. I saw a headline report the other day that says that said a headache is now the most obvious logical symptom of someone having COVID. Anyway, I think for the most part, and I'm not a medical person, but I think most of it is kind of behind us or it's going away. You may get surges again of COVID. It's more cases than what it is mortality. So I think we're in an okay spot. And from a demand point of view, we see demand just going up and supply is relatively controlled. Even if OPEC were to increase production, Iran comes back on board or whatever, it's okay. Everything will be fine. So, guys, this is a happy ending to the story. So, on that happy note, this is Mr. Oxy saying thanks for watching. Stay safe, stay away from COVID, and I'll see you soon. Bye bye.